Hey folks, Vic here with a weekly video, week ending, what is it, May the 28th, 2021. In this video, I'm going to cover a request by one of our YouTube viewers, and the request was for me to do a video on identifying entries and stops and profit targets. Now these are going to vary depending on your trading style, and I'm going to go over an example of a swing trade and an example of a scalp trade, and you'll see what I mean. Okay, if you like this video, I would sure appreciate a thumbs up by hitting the like button, and be sure to subscribe to our channel. You just got to click that. There's a little subscribe button in the bottom right corner of the video. Okay, let's take a look at entries, stops, and profit targets. Okay, for swing trading, which Darko shows, the entries and stops are generally going to be based on 4-hour charts, whereas with scalping, which I cover, our stops are based on volatility. So as the volatility increases as measured by the average daily range, so will our stops, right? So you could use a natural stop, no problem. But sometimes the levels that we want to trade at don't offer a natural stop, but they're really good levels. So that's why we use the volatility stop. So anyway, first of all, here's an example of I'll show you an example of a swing trade. And this is one that Darko pointed out to his members. It's on the Swiss franc Japanese yen pair. And let's just break it down. Here's how he does it. So he'll first look at the monthly levels. So we're just trying to find really good solid levels. This is a really good level because as price pulled back a little bit in here, it shot straight up. It was a very strong level. And if you look at the weekly chart on this, let's just go to, I've marked the same level on the weekly chart, which is right here. This is that same monthly level, but look what it, see the weekly chart, how it just went straight up like this. That's really a very strong level. And look at zoom it in, and look at this. We have a breakout a couple weeks ago. The price broke out above that level. Okay, down to the daily chart now. What do we have here? So on the daily chart, here's that same level. Now look what happens. Price is, it's making higher highs and higher lows, and we have a higher high, higher close right here. And see how price establishes above this line here? That's all good. That's what you want to see when things are trending like this. And it pulls back to this line. Now let's go down to the 4-hour chart, which is our entry time frame. Okay, here it was, and this is the same level right here, and that's the 4-hour entry right here. On this level, you can see, and actually it was a little bit of a support level in here as well, and not a bad level on the 4-hour chart. That was the buy, okay, and it needed, I don't know, 65 pips or something like that. Around the one, the buy was around the 120, 60-ish level, and the bottom, the stop goes below this last swing. And this is a trade that you put on and leave it alone. You don't monkey around and micromanage it. So it goes up, tests these 4-hour highs, this blue dashed line in here. It tests those highs, and that put it up about 80 pips, which is more than what the risk was. And it's a good place to take some profit, or at least reduce risk below this low right here that's left behind. So the initial stop was here, move it up to here. Don't keep risking the whole thing as price is starting to test these levels like this. Okay. So if it came down, and you took some profit here and it came down and stopped you out, it's still going to be a nice profit, nice winning trade. Okay, but now you get a free look at higher prices. So then it moved up to another level up in here that was a weekly level actually, and Darko suggested taking more profit up here, up at this 2240 level for about 170 pips. And it depends how many lots you're trading. If you have a small account, you want to use micro lots. Okay, even if you only had 2 lots, if you scaled out like here and up here, in this, you'd be around a 2-to-1 reward to risk. Okay, and by the way, the final target for this trade is up at about 123.30, which is, let me just show you that level here, 123.30, which is, let me bring the weekly chart up here, which is right here on the weekly chart. Which also, let me just show you that on a monthly chart. That level is right here on a monthly chart. Can you see this? Let me just bring this up here. It's this level right here. So it's another level of expected reaction up there. And up at like I say, around the 123.30, which is, and that would be another 270 pips if it gets hit. The thing with this style of trading is that it's appealing to, because it's not necessary to be constantly looking at your charts. Okay, it's very hands off, with the only time needed to do anything is when a new level gets hit and you need to reduce risk and or take some profit. And of course, Darko always alerts the members to those situations. Okay, trade management is pretty objective at the beginning of a trade. We have very objective protocols for it. Then it becomes more individual as far as final targets are concerned. Just be sure that the reward to risks makes sense. Okay, and in this case, you could have taken the entire trade off. You could have taken everything off at the second profit target, like not even taking profit here, just reduced your risk and taking it all up here. Would have been like close to a 3-to-1 reward risk. Scaling it's about 2-to-1. Nothing wrong with that. Okay, so like I say, if you had not scaled it, you got about a 3-to-1. There's no right or wrong answer, but it is imperative that you do something about your risk when price starts retesting levels. Okay, and especially when you have an amount of profit that's at least equal to your risk. This is going to depend on individual risk tolerance and all that kind of thing. Now let's flip over to a scalp trade, and because the entries need to be more fine-tuned and it's more critical because we're just risking a very small amount of pips, and this is appealing to other kind of traders that like this kind of stuff. So we'll look at the stops and the profit like the entry stops and profit targets using a different trading style here. So for this trading, and I run our scalping service, we use the daily and the 4-hour levels for trading at. Then we zero in on the low on low risk levels to trade out on the 15-minute chart. So here's a couple of examples, or an example at least of a scalp trade. And here's the U.S. Canadian dollar pair, and this is again, we're scalping. We're not taking a position on this because there's actually a decent position trade to be taken on this right now that's ongoing, that Darko's got going on. But as a scalp, you have to know your trading style. This thing's going down, down, down on the daily and on the weekly. On the daily chart, if we look at this, I've had this level marked here. I mark these levels for our members all the time, and to watch, okay, for a reaction. That's right here, okay, that's at 121.33. If I go down to my 4-hour chart, you can see that that level was right here. The black line here is the daily level, this black line. This also happens to be a 4-hour level. So that alone, it's a pretty good place to sell with a stop above. You could put a stop above here, but and that alone would have been fine. You can actually fine tune that entry by getting a trade within this wick, and that happens on a 15-minute chart. And that level was right here. It was from a level back in here. I won't clutter this up with that much detail on it, but this was the, and you can see how accurate it was. It got in like very close. They don't always work like this, but they do though quite often. So, and then you get a move like this. This move from 121.39 all the way down to 120.59. You got about an 80 pip run on that. That needed a risk of just 11 pips. Again, as it goes down and you start to hit levels and you want to get the risk out of the trade and or take some profit, and then the final profit for our scalping is always an opposing level of daily or sometimes just 4-hour. Okay, so yeah, there's a couple of examples and the differences between them in terms of entries, stops, and so on. And it depends which trading style is suitable for you, as far as the choice you make for how you want to trade. Anyway, that's good. Thanks so much. So there you go. I hope this gives you a bit of an idea about how we handle entry levels and stops and profit targets, and how to remove risk and or take profit along the way. Thanks so much for watching, everyone. Have a great weekend, a long weekend actually, for those in the UK and the US. So keep that in mind. You can expect thinner liquidity for Monday, with bank holidays for those two major financial centers. All right, thanks again. Take care.